Let me ask you, so with the current, and you mentioned fiat currencies and different governments coming and going, with our current political climate and economy, what do you foresee the value of the precious metals market being?
Yeah, it's a very pertinent question, and further, it's an important one because if you take a look at gold itself, gold has hit like 7 historical highs in the last quarter, right? So what's causing all that to happen? Well, there are several factors that influence the price of gold. It just happens that most of those factors are favoring gold now and will continue to favor gold over the mid and long term. Okay. Short term, you're going to see fluctuation, but what caused gold to reach those record highs are things that will be with us for a while. I'll just list them off. The most immediate one that people look at is interest rates, right? Whatever the Fed is charged. And the Fed is in charge of stabilizing prices and increasing stable employment. Well, they missed the boat on inflation. Those of us who sit back have 20/20 hindsight. When you increase the money supply by 40%, you could probably expect inflation. But I will also say, knowing so many Fed governors, they're looking at lots of data that we're not looking at.
Sure.
Right? And so they just made a bad call. But now their job is to reduce inflation, which they have. It's not, used to be 9. It's around 3 or 3.25 right now. So the data is getting better, and their target's 2. Now think about that. Their target is that $1 is worth 98 cents next year. That's the goal behind what they're doing. But by reducing the interest rate, that means that reduces the value of the dollar. Mm-hmm. And when you're no longer making 5% interest just by keeping your money in the bank, and you're making less, you start looking for other investments.
Correct.
That could go up, and gold has been a benefit of the possibility of reduced interest rates. So I think unless a black swan event happens, you can expect the economy to continue to slow down little bit by little bit, and eventually the Fed's going to start reducing its rates, right? And so that will benefit gold. But there are other factors that are going on that impact the price of gold, namely people like diversifying and taking some chips off the table when things are uncertain. Mm-hmm. Well, it's uncertain now. Presidential elections, one uncertainty, but there's global uncertainty, right? You have a resurgent China who wants to be the dominant country, who's manipulating their currency, kind of leading a coalition to develop an alternative financial system to the United States. You have Russia and Ukraine war, which when you think about it, it is the largest land conflict since World War II. Mm-hmm. Put that in perspective, right. And that's not coming to an end. It's looking for ways to expand.
Correct.
Right? And then you look at the Middle East. So you have Israel and Hamas going at it, but now it's tripped into a little bit of Lebanon, and other countries are starting to get involved. You have to ask yourself, is that getting better or is it getting worse? It's getting worse. Right? And so the geopolitical factors that create uncertainty, certainty, either good or bad, investors can figure out a way.
Right.
Uncertainty, when you don't know what's really going to happen, prudent investors start diversifying, and gold is a beneficiary of that. And the last thing that's really driving up gold prices is increasing demand. Now, we may not be buying as much of it. No, we're still buying a lot here in America, but we may not be buying as much of it as we used to. But at the same time, central banks are buying, they're net buyers. So some sell a little bit, but net, their stocks are increasing. So you have to ask, why Are central banks diversifying into gold? Well, they're diversifying into gold because they're selling U.S. dollars to buy the gold. They're selling U.S. dollars because they're not sure where the dollar is going to go. They anticipate the dollar's value going down because of reduced interest rates, so they're kind of protecting themselves there. But there are countries like Russia who can't access because of our own, I'm blanking out on a word, but so we've prevented them from accessing their foreign bank accounts, but they can sell gold in the market, and that's one way they can kind of get around our restrictions. And so you're getting a lot of countries saying, we don't like how the United States and Western countries kind of control the financial system, and we just want some safety valves for us. Well, when a central bank buys gold, they're not buying a gold coin. They're buying a 400-ounce good delivery bar. And they're not buying one bar, they're buying tons of bars, which far outweighs an individual investor. But individual investors are also important because China's economy is not doing so well. And China doesn't give Chinese investors a lot of options. They can't invest in U.S. stocks. Basically, they can only invest in Chinese stocks, Chinese real estate, and gold. And Chinese gold.
Okay.
So real estate's in the dumps. Their stock market's in the dumps. Where are they going? Gold.
Got it.
And guess what? There are 1.3 billion Chinese, right? We have 330 million people living in the United States. So you have 4 times more Chinese, and even if a small percentage buys 1 ounce of gold,
That's a lot of gold.
that's a lot of gold. And so those restricted supplies, coupled with further depletion of supplies because of central bank buying, coupled by global instability and the possibility of reduced interest rates in the United States, have caused these world record gold prices. And ask yourself the question, do we think these things are going to be existing 6 months from now, a year from now, 2 years, 5 years? My bet is yes. And so the drivers of higher gold prices will be in place for quite a while.